Having a great day. I am super pumped for today's Tip Tuesday, but we rescheduled it, so it's actually Tip Wednesday. I was in an all-day conference yesterday, so I apologize for not being able to do it then, but I wanted to pop in here today because I think this is a really important or certainly very timely topic, which is what documentation do we need for tax time? I know a lot of y'all have already signed on to my Done For You tax prep, which is awesome. And if that's the case, you already hopefully know what to do because I've sent you a checklist and we've got everything handled for you. But for those of you who are DIYing your taxes, or maybe working with an accountant that hasn't given you this information yet, I wanted to just pop in here and give you a sense for what you need to have together so that you can feel in control of tax time this year. So let's go ahead and dive in. Bear with me one second. Let me share my screen here. And then, of course, if y'all have any questions, please put them in the comments. I will happily answer them as we go through. Okay. Here we go. So what documents do you need to prepare for tax time? Oh, it'd be good if I actually moved my slide. There we go. So first of all, I want to talk about what form you're going to file. This seems to be one of those things that confuses a lot of folks. And so I think if we have the right language and we know what form we're talking about, it can make things a lot easier on you. So if you are a sole proprietor or a single member LLC, then you will be filing Schedule C, which is a form that's part of your personal tax return. So the personal tax return is the Form 1040, and one of the forms within that form is Schedule C, and that's where your business income or loss will go. And again, that's if you're a sole proprietor or if you're a single member LLC. Now, if you are a corporation that has not elected S Corp status, then you will file the Form 1120. This is an entirely separate tax return. You calculate your business taxable income on it, and you actually pay taxes on that tax return. So it's its own thing. It has nothing to do with your personal tax return, except to the extent that your corporation has issued dividends. You would report those on your personal tax return. If you have elected S corporation status, so if you are an LLC or you're a corporation and you've elected to be classified as an S corporation, then you're going to file Form 1120S. Now, this is also a standalone tax return. It's separate from your personal tax return. But the biggest difference between this and the Form 1120 for corporations is that the 1120S, you're not going to pay any tax on this form. Because as an S corporation, all of the business profits or losses roll up to the individual shareholders, which would be you as one of the owners, and you actually pay taxes on those profits at your at the individual level, so on your personal return. So the 1120S is what we call an information-only return. It does need to get filed. It's really important. It gets filed on its own, but you're not going to pay any taxes on it. You're going to, once you file that 1120S, you'll issue to each of the owners a Schedule K1, which essentially is a form that tells each of the owners what their portion of the business's profits and losses are. And that's what you'll use to report on Schedule E of your personal tax return. So it's kind of like a two-step process there. Similar situation with a partnership. If you are a partnership, you will file a Form 1065. It's its own standalone tax return. It's much like the S corporation. You're not paying taxes on that partnership tax return. It's an information-only form, but you are creating Schedule K1s out of that form, and those get issued to the individual partners so that the individual partners can report their profits or losses on their personal tax returns, which is where they'll pay taxes on those amounts, okay? So just kind of knowing those forms can be kind of helpful. Now let's talk about important deadlines. So if you've elected to be taxed as an S corporation, if you are a partnership, or if you are a multi-member LLC, then you will need to file your tax return by March 15th. And that's the 1120S or the 1065. And I actually want to mention one thing. Going back here, I didn't put it on this sheet, but if you are a multi-member LLC, so you've got more than one owner member in an LLC, then you are actually going to file as a partnership for tax purposes, unless you've elected to file differently. There are other elections you can make, but for most of you, you're probably going to be filing as a partnership. And so if you're a multi-member LLC, you're going to be filing that Form 1065. So for all of those folks, for my S Corps filing the 1120Ss, my partnerships filing the 1065s, and my multi-members filing the 1065, multi-member LLCs filing the 1065s, your tax deadline is March 15th of 2021. Now you can extend it, but you do have to actually file a request for that extension to happen. If you are an individual, including reporting your sole proprietor income, your LLC income, including reporting your income amounts from your S corporations, from your partnerships that get reported on your individual tax return, your deadline is April 15th of 2021. And again, there is an extension that's available, but you actually have to file for the extension. You can't just decide you want the extension. So the first step in kind of getting everything ready for all your tax step is to actually review your accounting records. And hopefully you've been tracking your transactions in your business. If you haven't, DM me or put a comment below and let's get you all set up. So before you gather your information, I want you to make sure that number one, all of your transactions, so all of your revenues and all of your expenses are in your accounting system. Make sure everything's in there. The stuff that tends to get lost would be if you paid for business expenses on a personal credit card, or if your accounting system had a syncing issue and maybe it missed a couple of weeks or something like that. So you want to make sure that everything's in your accounting system. And by the way, that it's categorized correctly. That's super important as well. The majority of the problems I find on my clients' accounting records are that things have been misclassified. So the second piece of this is that you've actually reconciled your accounting system to your bank statements. So you're going to pull up every single bank statement, look at the transactions, look at the balance, and make sure that that matches what's in your accounting system. And if not, you're going to adjust your accounting system. So that's step number one before we even begin to get our documents together. So step number two is to gather all of your documents related to your income items. So for example, this would be your profit or loss statement or your income statement from your business. You get that out of your accounting system. That's going to show all of your revenues and all of your expenses by category for the year. You also want to gather any W-2s you've received. So if you had any wage income where you were working as an employee for someone throughout there, you want to make sure you gather those. Then there's this big bucket of forms called the 1099s, and these can be for all sorts of things. I'll kind of point out some of the more popular ones, but if you had canceled debt, you would get a 1099-A. If you sold securities, you would have a 1099-B. If you settled debt, like say you had a credit card and you did a settlement process, you'd get a 1099-C. If you received dividends, you would get a 1099-DIV. If you got unemployment, this is a big one for a lot of folks this year, you'd get a 1099-G. You'll also get the 1099-G if you had refunds from like prior year tax returns. Maybe you got a refund, you'll get a 1099-G. Interest gets you the 1099 INT. If you worked as a contractor, you're going to get a 1099 NEC. By the way, that changed for 2020. So that started in 2020. Prior to 2020, you get a 1099 MISC miscellaneous. It is very likely that a lot of folks who are issuing those 1099s this year may incorrectly issue you a 1099 MISC when they should issue you a 1099 NEC. If that's what they did, it's not on you. It's not your fault. Just still use the numbers. Don't worry about the fact that it's the wrong form. And then if you sell real estate, you'll get a 1099-S. So I'm going to pull over question over here. So Brianne asks, how do you put expenses in your accounting system that you paid for with a personal credit card? Just starting and haven't set up a business account yet. Yeah, this is a great question. So let me see if I can pull. Yeah, I want to do, let's pull this up. And while I'm pulling this up, let me know what accounting system do you use? That will give me some indicator as to exactly what to tell you. I don't know all of them off the top of my head, but most of them. So while I'm pulling this up, let me know what accounting system. And I think I can maybe even show you. That's what I'm trying to do, is see if I can show you in my accounting system without complicating things. So hold on. This is a great question. Let me pull my screen share off so I can pull this up. Sorry, bear with me real fast. I'm trying to pull this up. Looking at Quicken, is that okay? I'm glad you said that then. Let's talk about that in a second as well. So let me go to Hold it. Sorry, bear with me. Okay, I am not going to be able to show you this as easily as I thought, so I apologize. I'm going to reshare my screen, and then I'm going to answer your question, I promise. Let's talk about the accounting system. So Quicken's okay. It's not the one I would recommend. Tell me what you do for your business in the comments, but it's probably not going to change my answer while I try to figure out how to share my screen again. There we go. So here's the one I recommend to pretty much everybody. It's called Wave Apps. It's completely free. I'll drop a link in here. I don't get anything for recommending this. It's a really good option because number one, it is free, which I really like. Number two, it is I think really easy to set up and really easy to use. And so I highly recommend it for pretty much every business owner that I work with, unless you have like a really complex business. You got a lot of employees, a lot of sales tax, a lot of inventory. Then I might not recommend Wave Apps. Oh, virtual assistant. Perfect. Okay. 100% I want you to look at Wave Apps over Quicken. I don't think Quicken's the greatest option. A lot of people will look at QuickBooks. You don't need QuickBooks. It's too robust. It's a lot of money. Don't waste your money. Look at Wave Apps. It's completely free. It's super easy to set up. I would highly recommend getting a separate business bank account. I saw your comment about the LLC. We'll talk about that in a hot second. But even if you don't get the LLC, I would highly recommend doing a couple things. Step number one, going online to irs.gov and applying for an EIN, an employer identification number. It's completely free. It'll take you 15 minutes. And it's basically a number that will allow you to go get a bank account. In fact, when you apply, they're going to ask you, why are you applying for an EIN? And you're going to say, because I want to open a bank account. That's one of the options. That's step number one. Step number two is going and finding a business bank account and opening that. Now, I highly recommend Novo, and I do get paid for this one. I am an affiliate for Novo, but I love them. I use them. I'm going to drop them in here as well. And that's for folks who want to know. That's megkwheeler.com/Novo. Let me drop that in. I like Novo because it's designed for business owners like you and me. It's completely free. It's easy to use. But if you've got a bank you love, that's okay. Go with them, and that's perfectly fine. Just make sure it's a business bank account, not a personal bank account, because most banks in their terms will say with personal bank accounts that you cannot use this account for business. Now, obviously, that relies on them catching you using it for business. But I will tell you, I had a client recently who said she got caught. She got a letter from her bank that said, it looks like you're using your personal account for business. Please note, we will be shutting your account down. So highly recommend getting that business bank account. Now, once you have that business bank account set up, then you get your accounting system set up. You sync it to that business bank account. Everything should go through the business bank account. Money coming in goes into that bank account. Expenses coming out go out of that bank account. Let's get to your question, because you originally asked me this question. And I promise I'm coming back to the LLC thing. I haven't forgotten, so don't worry. You had asked, okay, well, what about when I do put personal expenses on my, or do pay business expenses on my personal card? This happens. This happens even in the best of worlds where we have lots of cash in our business bank account, but it especially happens at the beginning where we have no cash in our business bank account and we got to pay for some stuff, right? So it's not the end of the world if you need to pay for business expenses with personal credit card or personal bank account. The way you're going to report it in your accounting records is you're going to record it as an expense. So whatever the expense was for, office expense, travel expense, whatever it was, and then the offset, because every entry in accounting records is a two-sided thing. It's got a balance. The offset is going to go to an account called owner's contribution or owner's investment. And basically what that means is you put money into your business. You skipped the step of physically transferring the cash to the business bank account and then paying the expense. That's okay. But on paper, you put money into the business and then that money was used for an expense. So hopefully that makes sense to answer that specific question. And here we go. You said, was planning on doing a separate account, but was advised not to get an EIN until I decided on LLC, or not due to the amount of paperwork needed to switch. Okay. So here's the thing. If you know you're going to get an LLC, like if you tell me, yep, I'm getting the LLC, I'm working on the paperwork right now with my lawyer, I'll have it within the next month or whatever, then that is correct. Don't get the EIN, don't get the bank account, just wait till you've got the LLC, because once you get the LLC, you will need to get a new EIN, you will need to change the bank account over to the LLC, 100%. But if you're not going to get the LLC for 6 months or a year plus, then yeah, I would get the EIN. I would get the bank account right now. Like I would get stuff in order right now for your business. Because here's the thing. Whether or not you have an LLC, if you're making money, you're going to have tax consequences. You're going to have to include the profits and losses of your business on your tax return. And so it's really important for the purposes of being able to take those deductions and not having the IRS question you down the road. It's really important that you operate like a real business. And operating like a real business means having a separate business bank account for your business. It means having a separate accounting system. It does not mean, and I'm not saying you're doing this, but it does not mean putting our sales into our personal checking account. It does not mean running our business expenses through our personal checking account. Okay? It means having everything separate, even though you're not required to until you become the LLC. The other reason why this is really important is, well, two other reasons. The second reason is because it makes it a lot easier to track the numbers in your business. If everything is going into your personal accounts, it's really hard to tell what's personal, what's business. So just keep it separate. And the third reason is because if you ever did get audited, if everything's running through your personal accounts, the IRS is going to need to see your personal accounts, which means you got to show them everything. And then they're going to start to really scrutinize, well, was that really business or was that really personal? I would much rather be able to hand them my business accounts and say, this is my business. Everything business happens here. This is all you need to see. So I would highly recommend, unless you're working on the LLC right now, I would get the EIN, I would get the bank account, I would get the accounting system set up right now. And then when you become an LLC later, then yes, you're going to go through that process again. It's going to be a little bit of administrative burden, but I'd rather have you doing the right thing now and have to do a little bit of burden down the road. So that would be my advice. So hopefully that helped and answered your question. Let me know. Yeah, I think I got all your questions, but let me know. I don't know why I have a million of these little do-hoppy thingies here. I'm trying to take them all off. Hold on. Trying to get rid of them all. There we go. Okay, cool. But let me know if I missed anything or there's anything you want me to explain further. Okay, this comment makes me so happy. Just getting started and haven't accepted work yet, just trying to get all things set up. I love you for that because most people wait until they already have stuff going on to try to figure this stuff out. I love that you are doing this now. So my advice is the same. Do it exactly like what I said. Look, treat your business like a real business from day zero, right? Don't wait till you have revenue coming in to all of a sudden go, oh, I guess I'm a real business. Now let me act like it. Get all that stuff set up at the beginning. Treat it like a real business. And I promise you're going to be happier for it. Okay, perfect. Glad that helped. So coming back to this slide, we talked about these income documents we want to gather. So you're going to get probably some combination of these 1099s. Most of us get at least one or two of these. I do want to mention, if you are making sales through like Square or Stripe or PayPal or any of these, Fiverr or Upwork or whatever, you may get 1099 NECs from them. Actually, sorry, for them, it's going to be the 1099K. Same concept though. They're going to send you these 1099s to show the sales that you made on their platform. A lot of people get really hung up on these 1099s and they base the income that they put on their tax return for their business on the 1099s. You're not always going to get a 1099. For example, it's not required to send people 1099 NECs if you have paid them less than $600 for the year. Or it's not required to send someone a 1099 NEC if you paid them via a third-party payment processor like a credit card or Stripe or PayPal. So as the person being paid, you may not get a 1099 for the income that you brought in. It does not mean that you don't have to report it. You absolutely do. So even if you don't get a 1099, you're still going to report that income and you're going to know you had that income because you've been tracking it in your accounting system, okay? So the 1099s are a good reference tool. Like when I get mine in, I take the number on the 1099 from Stripe, for example, and I compare it to what I have in my accounting records just to kind of make sure all looks good. But I'm not relying on that 1099 or my 1099s to report my income. And then lastly, any other documentation from any other sources of income that you have. There are some more obscure ones, but the 1099s and the W-2s and the P&L are going to be the basic ones. But anything else coming in, if you've got Schedule Ks coming from investments like a partnership, like an S-Corp, maybe you've got, real estate, investment, something like that, you'll want to get all of that documentation together. All right, let's move on. Gather your expense documents. So specifically related to your business, you want to get a detailed breakout of your business expense categories. If you're working with a CPA and they're going to do a good job, they're going to go line by line. This is what I do for all my clients. I go line by line. I look at every single expense, make sure it's a legitimate, or not legitimate, but make sure it counts for a tax deduction, make sure it's classified correctly. I was just on a call with a client last night, and she had multiple items of income and expense that were not classified correctly. And it was actually overinflating her taxable income. So had we not fixed it, had we not found it and fixed it, she would have paid more in taxes. So make sure that everything is categorized correctly. Make sure you're giving your accountant details if you're working with one. And if not, make sure you're going through and making sure everything looks good. You may want to have your bank and credit card statements ready. These aren't necessarily things that you have to have. If you've taken good accounting records or kept good accounting records, you won't necessarily need these, but you might. You might need them to do the reconciliation, and you might need them to dive into more detail if there's not enough detail in your accounting records. So just keep that in mind. Payroll documents, if you had payroll, you may need your payroll documents to support the numbers that you're taking for your payroll tax deductions and other items. You also want to make sure you have documentation to support any deductions that have special rules. So an example would be meals and entertainment, which typically you can only take 50% of. You've got to have a receipt for every one of those meals that you deduct, including who it was with and what the purpose was. If it's gifts, there's a limitation on gifts. You can only deduct $25 per person per gift. Oh no, sorry, per person. I said that wrong. $25 per person for the year. So if you gave, you can't just put $1,000 of gifts and I'm just going to put that on your tax return. No, we need to know what that $1,000 broke out into. What were the gifts? Who were they for? How much was each gift? Travel, same thing. Was there personal travel? So having documentation to support all those kind of special deductions is really important to make sure that they are in fact legitimate deductions, and to make sure you know exactly how much you can take. And then lastly, you might also have what's called a 1098, a mortgage interest statement. This is going to show you the amount of interest you paid. You may also get documents for property taxes. If you have a property and you paid property taxes, if you itemize, these are deductions that you can take on your tax return. So gathering all of these expense deductions, in fact, other ones I didn't put on here, I don't think, right? Oh yeah, no, I did. I have a second slide. Never mind. I was like, wait, I missed a bunch. 1098E, which is your student loan interest if you've paid student loan interest. And then any documentation you've got, or all documentation you've got, I should say, to support all of those sort of extra deductions or credits that we potentially can take. So if you pay for daycare, that's a big one for me and my husband. If you pay for daycare, having the tuition bills, if you contributed money to your retirement accounts, if you paid alimony, if you are a teacher and you bought supplies for your classroom, if you have dependents, if you've got kids or other family members that count as dependents, having their names, not addresses, ages, birthdays, social security numbers, how long they lived with you. So if they didn't live with you the full year, having that information. You want to have everything like that to support these deductions. Charitable contributions. What organizations did you give to? What dates? What was the amount? If it wasn't dollars that you gave, if you gave stuff, what was the stuff you gave? What was the value of the stuff you gave? So having documentation for all of this is really important, and it'll help to maximize the deductions that you take, which reduces your tax liability. So it's all good stuff. Okay, other documents that you may need. Your prior year tax return. So especially if you're working with a CPA, this is something they're going to ask for because they want to see what you've done in the past. So make sure you pull that up. If you are in a partnership, you'll want to provide the partnership agreement. Similarly, if you are in like an LLC, so that your accountant can see how profits and losses are supposed to be divided amongst the partners. If you're working with an accountant, you may very well need to provide a copy of your driver's license. This one always throws people off, but it's for our purposes, we have to verify your identity. So it's a really important part of the process. And then this is super important, any tax payments you made for the year that you're filing taxes for. So if you paid quarterly taxes, make sure you've got those written down somewhere so you're including the fact that you made those payments on your tax return. Because remember, if your tax liability is $10,000 and you paid $9,000 in during the year, but you forget to put that on the tax return, then the tax return is going to say you owe $10,000, not $1,000. So we want to make sure we've got documentation for those as well. Okay, a few reminders. We're almost at the end, I promise. We're coming back to the personal expense thing, or personal account thing. If you paid for business expenses out of your personal account, which by the way, is not the worst thing to do in the world. Even in my business, I do this. The example I always give is my personal credit card has a really high credit limit and has really good travel protections like insurance and things like, healthcare and things like that if something were to happen. So when I travel for business, I put all of those business expenses on my personal card because I just want the protection that my personal card offers. I then basically either have my business reimburse me for those expenses, or what I told Brianne to do earlier is I will essentially record them as an investment into my business, an owner's contribution into my business. But if you do this, make sure you include these expenses on your business calculation. So all that travel I put on my personal credit card, if I don't put that into my business accounting system, I'm not going to get to take it as a tax deduction because I'm going to forget it happened. So you want to make sure you're keeping a record of those, and you want to have really good documentation because again, anything that is done outside of the business accounts needs to be really well documented. Now, you can also likely deduct expenses for your home office if it's your primary place of business. You need really good documentation on this, and the things that you can deduct would be, your mortgage interest, your rent, utilities, maintenance, plus some other categories of stuff. There are some very specific rules on how much you can take and different methods you can calculate, but just make sure you've got really good documentation for all that stuff. And that is not a deduction, by the way, that we typically put into our accounting system, right? So this is kind of an out of accounting system deduction. So it's a good one to be reminded of and make sure you've got the documentation for. And I did mention before that you can extend your tax return. So worst case, if you're really stressing out and you're like, oh my God, it's too much. You can extend your your personal tax return deadline to October 15th, but you must file the extension by April 15th. Similarly with the S Corp or the partnership or the corporation returns by March 15th, if you want the extension, you've got to file for the extension by March 15th. Lastly, and most importantly, an extension of time to file is not an extension of time to pay. I cannot stress this enough. And that leads me to, what if you owe money and you can't pay? The first thing we're not going to do is we're not going to freak out and not file the tax return. In fact, the worst thing you can do when you owe taxes that you cannot pay is to not file your tax return, because there are huge penalties for not filing your tax return, whether or not you pay. So we're going to get that tax return filed on time, or if you want to do the extension, file the extension and then get the tax return filed timely by October, but you're going to file it on time. Now, there are penalties for not paying on time, but they're not nearly as bad. And the IRS does have payment programs. So, and they're not that scary, and they're not horrible. In fact, the interest rates aren't crazy bad. So if you cannot pay, file the tax return anyway, and then you can do a couple of things depending on how much it is and how quickly you can pay or how long you need to pay. You can either, wait to pay and incur some penalties if it's going to be fairly soon, or you can file the form to request an installment agreement with the IRS. And I promise you, it's not scary. It's the best way to go. So please just promise me, if you cannot pay, you will not file your tax return. Okay, so we're going to file that tax return. And that's all I've got for you, friends. So go ahead and put questions in the comments. That brings me to, if you want someone to do all this for you, if you don't want to deal with this shit, then I still have a couple of spots. I think I'm not sure. I think we might have 3 spots left for our Done For You tax prep for 2020. You can learn more by going to megkwheeler.com/tax. Definitely grab your spot today. We are well within, we're cranking out all the tax returns. So the longer you wait, obviously, the more pressured it makes all of us, and the more likelihood that, it'll be a stressful process. So get in there, grab your spot. Let's start getting those documents together, and we will take care of everything for you. And I am just going to leave it there for anyone. I'll wait just a couple more seconds in case folks have questions. As a reminder, when you go to megkwheeler.com/tax, I've got two options. You can do just 2020 tax prep only. We just do the tax prep for you and we file it for you, and that's it. We also have a 2021 package, which currently includes for free the price of 2020. So the 2021 package, you get the 2021 tax return prep. So we're going to do your taxes next April. You get all of your quarterly tax calculations for the next year. Oh, you're so welcome, Renata. Thank you. We do all of your quarterly tax calculations for 2021, so you don't have to worry about those. We have 4 quarterly tax planning calls. We give you ongoing tax support throughout the whole year. So we do this through your client portal where you can send me messages. And we also have Voxer, so you can send me voice messages. So basically, you have unlimited access to ask me questions for the entire year through next April. Plus, there's some other bonuses as well that you can check out on there. But again, that 2021 package, you're going to get everything for 2021 taken care of, but you're also going to get 2020 taken care of completely for free. We've thrown that in when you sign up for that today. So megkwheeler.com/tax. Again, you've got those two options if you want someone to do your taxes for you and you don't want to deal with this stuff. So I'm going to leave it there. I don't see any other questions. If you're watching this on the replay, go ahead and drop your questions and we'll get them answered. I do a weekly Q&A every Thursday. So tomorrow, inside the Badass Moneymakers free Facebook group, which you can join by going to megkwheeler.com/group. And I will see you all next week. Bye.